Pharma, de-emerged from Piramal Enterprises, has just been listed. So we have with us here today Ms. Nandini Piramal and Mr. Ajay Piramal. Congratulations on the listing.
Thank you.
As a background, the company's pharma business comprises of three segments, with the contract manufacturing making up to 60% of the overall revenue. Also, complex hospital generics and Indian consumer healthcare. So my question to you, going forward, are we looking at any change in the segmental contribution to the revenue? Which segment is expected to propel growth for the company?
Okay. Obviously, while we're saying that we think there'll be a 15% growth, organic growth across the segments, the consumer healthcare is the smallest, and so from a low base, it will grow the fastest. So we can expect that contribution to increase a little bit. But I think the majority will still continue to be the contract manufacturing and development, and then followed by complex hospital generics.
Also, we have 68% of our revenue currently from regulated markets. Now, with most Indian pharma companies refocusing their attention to India, do we have a similar strategy in mind?
So a lot of the revenue actually comes from contract manufacturing as well as complex hospital generics, which are very global in nature. A lot of our customers are global, as well as in the complex hospital generics, the market is global. So I think we'll continue to expand and to see growth globally. In India, I think we'll focus on the consumer products, and we'll look to grow that faster, as well as look to acquire brands as if we see the valuations are right.
There is a difference also. Most of the Indian companies which are doing, which have global sales, they are doing generic formulation sales. Those are the ones where there's an increased competition. But we are actually doing our sales are in the custom manufacturing and development are to customers, global customers whose demand is actually going up. And post-COVID, this demand is even further going up because they want to move from being dependent only on one country, mainly China, to a China plus one. So that is a big difference. Also in complex hospital generics, because of the complexity of the products, there are not that many competitors, so they will grow. So there is a little bit of difference between what usually other Indian companies are doing.
So recently there have been some cost pressures impacting our year-on-year profitability. So when do you expect these cost pressures to ease out, and what are the steps that are planned?
So the cost pressures are really because of, there is global inflation, as you know, and our manufacturing, a lot of our activities are outside of the country. So that's one cost pressure. And the energy prices going up, that's the other. Supply chain also, the costs have gone up. But these are, I think, these were really the effect of COVID, and now, of course, the Russian and the Ukraine conflict. I think we are hopeful that they will now start coming down. We are seeing supply chain getting better. I think inflation still continues everywhere, but they'll get better. Otherwise, it'll have to get reflected in some better pricing.
Could you please provide some guidance on the EBITDA margins, as currently they're quite compressed as compared to the peers?
I think as we've seen that we think there will be transitory challenges over the next few months as energy prices and inflation continues. But I think we're pretty confident that as we see sales, we should get more operating leverage. So in the 3 to 5 year time frame, I think we can say the 20s.
And the talk of the street is that the pharma business is quite a complex one, especially the Piramal Pharmas. So which vertical do you believe has the potential to pleasantly surprise the investors?
I think investors' expectations, I think we've been talking a lot to investors. I think they like the model and they like the diversity. I think the diversity of our model in tough times helps us actually, see good sales. So I think I would leave it to the wisdom of the street.
And any organic, inorganic expansion plans? Because I believe you all have a cash balance of around 7,000 as on March. So
No.
That cash balance was really in the overall balance sheet of the company. And I would say that most of that was dedicated to the financial services business. This business is adequately funded, and we have, as you know, that we had raised money in 2020 from Carlyle. So we have adequate we have adequate uh, we have adequate funding for growth. So we are going to spend about 1,200 crores now in this year and in the next year, so in the 18 to 24 month period. That is one thing. And inorganic, in the last 2 years, we've already done, as I said, 3 acquisitions. And as and when there's a good acquisition, I think there'll be enough funding to do it. The acquisition must fit strategically and must create value.
And so, any specific segment of the business that we are targeting for that?
So all the businesses, again, we have always through our history, we've done this. We've grown organically as well as through acquisition. So each of these businesses, I take the example of the last 2 years. We did 2 acquisitions as far as in the CDMO business is concerned. We did one for complex hospital generics. We did 2 brands for the OTC. So we will do it depending on what is, as I said, valuations and what is available.
Thank you so much.